Ladies and gentlemen of the crypto space, we're live at a Thursday, April 11th at 3:16 p.m. A bit of an ad hoc stream. I wanted to talk. I wanted to see how everyone's doing. I know how I'm doing. I know the data that I'm looking at. And let's talk about the data. I would hope that more people would engage with comments, ask your questions. How do you feel? What assets are you thinking about? We'll look at technicals. We'll look at charts. We'll talk about fundamentals. Anything on your mind, hit those comments and let's have a decent time today. I just kind of felt like talking and bam, we're on a stream. So the real story going on and why things are a little bit malaise, everything's a little bit down and out, the market seems a little dull, is Japan. Japan's yen is not being defended. It is falling below historic levels, and that is causing a ripple effect in the markets. Currency, relative valuations of currencies basically drive capital flows. Combined relative valuations of currencies with change in interest rates of various instruments, particularly sovereign debt, and you get significant changes in cross-border capital flows. How do you understand this from a crypto space perspective? All right, bam. All of a sudden on Avalanche or Phantom, you see 200% APR and everything on pick a chain, Optimism has fallen below 20% APR. So if you see an incentive, if you see an interest rate differential or a potential opportunity, it triggers cross-border capital flows. And that's exactly what's occurring with regard to Japan and changes in interest rate policy, especially in Japan, and potential disruptions to changes in interest rate policy in the domestic United States. If they don't cut rates, do they cut rates? This all affects the flow of capital from market to market around the world. So aside from the yen basically falling through his historic thresholds that we were trying to hold since October of 22, or Japan was trying to hold since October of 22 with their artificial intervention programs and their yield curve control, so on and so forth, basically they've abandoned those processes. And we're getting the structural deviation to the global financial system. You know how much we talk about structure. And when something significant structurally deviates, it causes all sorts of distortions. One of the most meaningful things that we know causes all sorts of distortions is bond market volatility. Bond market volatility is the interest rate component of the thing I just talked about, relative currency rates and interest rates. This is U.S. debt interest rates, and U.S. debt interest rates significantly causes all sorts of behavior around the world because associated with an interest rate is a fluctuating price point, fair market value of various duration debt instruments. And as of right now, this is a big interaction right here from a candle perspective. Look at that, bullish engulfing thus far, right into the 10 SMA and the monthly. What's the significance of moving averages on a volatility indicator? I don't necessarily know, but that is a relatively ominous candle from just a technical perspective. We know that increased bond market volatility makes it much less interesting to print dollars, borrow money. If the value of your collateral is fluctuating or an interest rate is fluctuating, you're probably hesitant. If you think mortgage rates are going to drop from 7% to 3%, you're probably not going to take a mortgage at 3%. You're probably going to wait and hope that it drops to 3%. So as you can see by that very simple example, uh, the fluctuation in interest rates clearly is going to suppress the crap out of people taking a mortgage. If they think it's going to go lower, they're going to wait. Same thing happens with global collateral, U.S. Treasury instruments, and this all plays a role in relative currency valuations, either encouraging or inhibiting financial activity in the most important way possible with regard to credit. And credit also known as money printing. Anywho, those are the two big things. Equity indices look relatively supported. I mean, that's a big bump, 11% on the move. That's got to be causing a lot of fear, and that's pretty much what I account for red days like this in an extremely liquidity sensitive market. The crypto space sniffs out volatility in liquidity. When volatility is low and collateral money, as we've talked about, is flush, those are the precursor conditions for a very rapid expansion in the valuation of crypto assets, which is why we've talked to a great length about the end of 2024 after Treasury has to refinance $10.8 trillion worth of debt, because that floods the system with the collateral. And if they're able to control the volatility of those treasury instruments, it's going to create conditions that are extremely favorable to currency expansion at a global level. So the time is not here yet. I mean, the easiest way to say it is we haven't started the market cycle yet, because the market cycle isn't what people think it is. What we really want to understand is the global currency cycle as the currency is expanding and contracting. The folks talk in terms of liquidity, but I very much like to understand things in terms of currency, dollars, because that's the easiest thing from a crypto space perspective to understand, because we can literally look at the data. And it's pretty simple to say that if you look at the data and there's more dollars in the market, the likelihood is more financial activity, because why would dollars come into a market? To do something. So that's why the most important observation in crypto markets is a positive sum dollar environment. We're at about a 1% week over week positive sum environment for the entirety of the crypto space. We're at a 0.68% on mainnet. Let's take a look at the ever popular base. Big capital inflows up to 1.8. This was less than a bill shortly ago. Very interesting to see all this capital inflow, but I think the volume data may be hinting at something interesting going on base. Avalanche, probably marginally positive. Everything's marginally positive if all is about 1%. 6% on optimism. Where's Arbitrum? Marginally, not even marginally positive. That's basically flat. Might as well be a big zero. Binance Smart Chain, a little bit negative, but these are all relatively minor shifts. When you see like a 10% change in stablecoins, you start to see significant financial activity. Oh, I thought Phantom was on the positive, minus 7.5%. You're going to see reduced financial activity because there's less capital chasing the assets. More capital chasing the assets, you're going to see price appreciation. You go over to the volume indicators, you see quite an interesting picture. So you have a marginally positive sub environment from a dollar perspective, but it's a minus 9% overall market week over week. So what is likely to happen is a concentration of financial activity into specific markets. So some markets are drawing down in volume and some markets are expanding. If you go over to mainnet, you're on minus 2.52% for the week. If you go over to Phantom, that's what I was suspecting, plus 25% in financial activity. Relatively microscopic 36 mil. You go over to Ethereum, it's doing $2.5 billion worth of activity on a 24-hour basis. But a big bump in volume on Phantom is usually indicative of the fact that this is a very interesting thing, a very interesting chain. Sonic is going to be very interesting. Avalanche still negative. Arbitrum 12.78% week over week increase in financial activity. Go over to base, minus 20% decrease in financial activity. So this is the discrepancy that I think is quite interesting. If you have such an increase in dollar supply on base and a 20% drop in financial activity, what are those dollars doing? So the Coinbase integration, it's their network, could be indicating that they're using the chain for storage, not storage for their centralized exchange activities. They're building and they're deploying and they're trying to expand the base implementation. I think it's a foreshadow of things to come. I think base is going to be doing some very interesting things. Um, and it's frankly just the same thing with Arbitrum, with Robinhood, base with Coinbase. I posted that tweet shortly ago, a couple of days ago. And I think these are very interesting things coming for particularly base, Arbitrum, Phantom. I think optimism is kind of taking the sidelines, but the optimism superchain narrative is expressed very well vis-a-vis base and fractal. So I think that's okay. And I find it nice that the Velodrome team has exposure on base vis-a-vis aerodrome. So the team is making progress and achieving good things for themselves. Um, Anywho, so other chains are pretty interesting too. We've been recently looking at Linnea, which has the consensus narrative, and that has a 44% week over week increase in volume, with Linex and Nile exchange going back and forth a couple of times thus far. Nile with a 316% week over week increase in volume. Uh, Obviously, very much moving ahead of all other competition. Big double digit percent drops in activity on everything else. That's probably gonna, this could be indicative that there's a trinary uh, leadership situation going on in Linnea between Linux, Nile, and Pancake. And fine, that works well for the network. Great infrastructure. And what else more do you need other than Pancake, which is well known for what it's capable of, Nile with the liquidity financing it's capable of, and Linux for also being a liquidity financing implementation. Curious to see what plays out with Linux and Nile over the coming months. We also have been following Mantle of late, and with a 9.32% increase in week over week financial activity. Very microscopic networks, $23 million in financial activity on a daily basis, and Linnea is microscopic as well. So your major networks are more important to watch, and you could potentially have opportunities on the small networks as well as the larger networks. Probably going to have increased volatility in the smaller networks because there's less capital floating around to sustain asset prices, especially as momentum starts to build in one direction or another. It's very easy for something to roll over and capital flight to occur. It's going to be a very interesting cycle heading into 2025 and beyond, particularly with the ease of cross-border capital flows. There is zero friction whatsoever for capital flight. You want to go to another country, you want to send money somewhere cross-chain, which is basically the other country's story that I tell. It's just click of a button. There's no friction at all. Frankly, Stargate is really established everywhere with a capacity to get to Mantle, most certainly. Does it have Linnea integration? I don't know. Let's see for a second. And it's just a heck of a list of integrations that they have at this point. I don't think they have Linnea. Frax still not yet. But it's listed there. That's very interesting. Astar is interesting to see up in Stargate. I haven't looked in a while, but obviously Mantle Scroll is interesting to see there. Obviously, all the stuff we know from Optimism and Arbitrum Menace is good to see there, and all the big stuff, Polygon, BNB. So this is going to be a heck of a facilitator of cross-border capital flows into the coming years. Very exciting what they built over the last couple of years. Arrow, good afternoon. Much pleasure. The bad guy, Cap on a Thursday. Let's go. Throw your comments. Say whatever you want to say in QA. What assets are you looking at? What protocols? What questions you have about macro financials? Let's have a bit of a QA today, and we'll see how long this stream lasts. Idan's in the house. A pleasure. Thursday Classic. It's the good old days, if y'all remember, like 2021. We used to do this thing 5 days a week. When do you choose to use income yield to add to purchases versus just holding cash? I think in terms of position size, and I like to believe that a position size is a target, and it's obviously subjective. What is a target position size? Now, if you have a position size that seems reasonable, then you don't have to add to it. And now you're just thinking in terms of income. And you know very well that I've had my target position size recur for years at this point, and it's not something that I've added to in any meaningful way. And that's okay. I've used that income to acquire additional positions of appropriate size. And obviously, coming out of the bear market of 22 and 23 and into still 2024, a lot of DeFi protocols, financial protocols, not memes and capital gains oriented assets, have still remained relatively undervalued. So we've been able to buy new positions from these cash flow positive core positions in the portfolio. My example is Nile, not large enough to liking, so could just DCA with yield. Well, grow a position. It works as well. Uh, Compounding and just DCAing, all these are very reasonable methodologies and strategies and terminologies that allow a portfolio to grow, adding additional components to it. There's no reason not to, yes, experiment, but we all have a capacity to execute DCA. So the whole point is achieve your expectations. That's the most important thing. One of the most important things is to at least define your expectations. If you have an expectation of a position getting to a particular size, you better make sure you have a capacity to get it to that particular size. And if you don't, it might not be the right position to take. The most important thing is to meet your expectations. Not meeting one's expectations is what leads to disappointment. What no one wants to experience is disappointment. So set your expectations reasonable, meet them, and feel like you achieved at least what you were expecting. So obviously, we set our expectations with regard to where price action is going to head into the next 6 months. 12 months heading into summer of 2025 and try and stay reasonable. And reasonable, reasonable is going to be relative to whatever you guys think individually. But I could say reasonable expectations is at least multiples on the portfolio. And the portfolio can be filled with many assets, or if it's a smaller portfolio, relatively concentrated. I think 2, 3, 4, 5x is quite reasonable with a concentrated portfolio, and even up to 10x on even a moderately diversified portfolio. And that's on a relatively conservative portfolio. And that's also the boring end of the spectrum. And we know all too well that crypto doesn't stop at the boring end of the spectrum. Crypto does weird things, and macro financials are getting weird. So, what are weird multiples? If boring is 10x, weird multiples are 50x. Portfolio goes 50x. And we're not talking about uh, tokens absent quote unquote utility. We're talking about financial primitives that carry interest, financial businesses, protocols that offer credit, protocols that offer foreign exchange, that are AMMs. And these are real businesses, whether folks want to define them the way I do or not. Diego Posey in the house. Hi. Bad Guy Cap, what is your opinion of the recent CPI numbers? Interest rate cuts being kicked down the road. What does this mean for us? Well, CPI isn't that meaningful. So yes, what does it mean for us? CPI isn't that meaningful from a financial standpoint. So from an individual standpoint, CPI sucks. Inflation has been very painful. Even if you're upper middle class, you're still feeling the pinch. Everyone's feeling the pinch, unless you're ultra wealthy. And even then, so you're still spending more on shit. And what do we know about the ultra wealthy? They don't like spending more on shit. So nobody likes inflation. So that means they got to get goods and services increased in supply. And that's the only thing that really cures inflation. You have to balance supply and demand. So with regard to Fed funds rate, that's a lot of talk and hyperbole and rhetoric and jawboning and speaking from these FOMC board members. And what does it all mean? I think the higher interest rates are going to cause much more of an expansion in global currency supply this cycle. And we have yet to really start the ferocious part of the currency expansion cycle. We're past bottom and we're into recovery of the currency expansion cycle, but we haven't got into the degenerate phase of where I got to borrow wherever the hell I could borrow from in order to do the thing I want to do, to buy the thing I want to buy, to get in on the position I want to get into. And it's coming. It's what we recall from 2020 and 2021 is going to be that much more insane, considering two things. One, we saw the behavior of meme coins thus far in the last, let's say, 4 months. It has been ferocious. What happens when 10x the amount of capital thus far that has been engaging with Aave and CRV USD and Abracadabra and the dozens and dozens of other permissionless lending protocols? What happens when that capital goes multiples and we see all of that leverage flood through the system? In turn, all those interest rates flood through the system because many of these credit products are encapsulated into a derivative that's usable as collateral, which is quite fascinating to say the least. LP positions that carry yield. I think the capacity, we've already seen what Aave wanted to do back in 22 with just tokenized LPs, and now all LP positions on countless AMMs are NFTs. So they're literally encapsulated yield-bearing derivatives, which you could collateralize because all you need is an oracle to be able to assess the relative value so you can borrow capital against LP positions. So I think we're going to see quite the frenzy of credit, and we'll see protocols, businesses responding very quickly to the demand of market actors wanting to seek credit, and a bubble will occur. The bubble is inevitable because these credit systems are permissionless. The bubble is inevitable in meat space where the credit systems are not permissionless. So we must conclude that the bubble will be that much more ferocious in these crypto markets where it is permissionless. It's only rational to make that observation and conclusion. So it's gonna get weird. The bubble is gonna be wild. There's always a bubble. I mean, the entire financial system is a bubble. Understand the bubbles and know that the only way to navigate them is to buy at a discount, not at a premium. You're just going to screw yourself over if you're buying shit that's at 100x on the money already. And you're getting the last 10x because if there's always something else that you don't have to buy at a premium. If something is already run 100x on the money and it runs an additional 10x, someone's getting 1,000x on the money and you're getting 10x. Seems like a pretty shitty position, in my opinion. Food for thought. Good morning, Anthony. Much pleasure. Hit those comments. Hit those comments. If you're on X or YouTube, it's all good. Daniel, hi Cap. Raul Powell said currency debasement plus inflation is around 12%. When the interest rate is 5%, you're still losing 7%. How do you feel holding underperforming assets sub 12%? So, generally speaking, when I talk to my family and my wife, I'm not really into balances in bank accounts. And that's to some degree the counterparty risk, the non-flexibility of the banking system. If you want to transfer money from one bank to another, you literally often need to go into the bank, especially to do a wire transfer. And if you need to do an uh, uh, what's the other transfer? Any transfer between banks, it takes one time, two authorization of some kind. And dare we talk about international capital transfer, it's just frankly stupid. So I like my capital owning businesses. And I like to think that I prefer cash flow over balances. So how you denominate that cash flow is another story. But generally speaking, even through the bear market, I was not fond of carrying a large cash balance. So I want to deploy as soon as reasonably possible, but that means there has to be actual opportunities available as well. So, 2025 into 2026 and seeing maybe some recovery in 2027, and when that comes, it's going to be an interesting conversation that we have about how capital was taken as income this cycle, what denomination it was stored in, how long it was in the transitory cash position, and when is deployment made to a potential business at an opportunistic price. And I think we're running out of opportune price points. We're running out of discounts, ladies and gentlemen. It's very interesting where we are in the cycle. It's good to see. Pretty comfortable where things are. I mean, Bitcoin at 70,445, all things considered, is quite remarkable. This is above previous all-time high. That's crazy. It's just literally hovering there. Quite remarkable. Diego, what do you think of Athena, New Terra Luna? Everyone has been asking that question. I think there's quite a distinction. I think they'll be able to pass on a negative rate. So obviously there's large rates that are offered by it because of the composition of net long, net short, and what they're able to extract. Uh, there will be a time likely that it's at minus 10%, minus 15%. So I think in that regard, it's going to cause all sorts of economic distortions, but not with regard to its capacity to continue to be a product. I don't think people really understand what it's doing. It's literally just surfacing the delta in yield between net long and net short, and uh, and that can be negative. So I think that is interesting. I think derivatives are interesting, and I think these systems should be permissionless. And I guess libertarian in that regard. I'm not too fond of regulation. I'm much more fond of businesses being built, and if they frickin' explode, they shouldn't have been built. So let them be tested, let them test themselves, and if there's a demand for a product, let people consume that product. It's up to each individual to assess how much risk they're taking, and if they're exposed to negative interest rates for even a short period of time, that's an individual's problem. And the government loves to say if enough individuals are exposed to a problem, it becomes the problem of society. That's a complicated topic, and we know where that has taken us as a society in not necessarily good directions. I think individuals have a responsibility to take on their own responsibilities. They have a right to take on their own responsibilities. I think an individual's problems is their responsibility to take care of. Better said. Hope that helps. MFNQ GM, hello. How are you? Uh, Era, besides Phantom, what other L1s, L2s are you looking at besides Linnea? Uh, Menace has just such a small amount of capital on it. I mean, Fractal's a big deal. Cosmos hubs. It's not really a popular topic amongst DeFi folks, especially folks from last cycle. Uh, Maybe I'm biased because I've had 5 years exposure to Atom and the original Cosmos network, which is still clearly a core component of the entire Cosmos Hub ecosystem. So there's certainly some bias in my conversation, but I generally like what I've seen. I mean, literally, a good part of the excitement over Cosmos Hubs is the airdrops. Saga just dumped a bunch of stuff. Hava is dumping a bunch of stuff, and it's just airdrop, 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 airdrop. DYM and all the roll apps are just going to continuously drop stuff. I mean, that's not really financial activity. That's opportunism and financial naivety, thinking an airdrop is a reason to own something. Uh, so from a crypto-centric perspective, sure, I mean, it's opportunistic, But I like to think there's much more rational ways to think to own something, not an air job. That's, I mean, for lack of a better way to say it, it sounds like a stupid reason to own something. A stupid reason to own something does not mean it's going to not be financially opportunistic. Still stupid. I mean, so obviously, like meme coins are a great financial opportunity quite often. I think the concept of encapsulating community into a meme coin doesn't fall into the same like stupid financial product as like an air job. I think encapsulation in a community, I think is actually quite interesting. And that introduces complexities and a lot of contradictory thoughts because obviously the price action on them is often quite unreasonable. But I think the community aspect of tokens and NFTs is actually quite meaningful to society. It's an expression of a need to be part of a community, which may or may not be indicative of health of a society. It's not something I'm researching, but I think it certainly is an expression of people that are needing to be part of a community, and they're expressing that financially. So I think that's interesting. At least this is the very not common type of conversation I have with myself to try and assess the structural significance of these types of activities and these types of products that exist in crypto markets. Uh, there's a demand for all of these products, and that's quite fascinating to say the least. Um, Dimension's interesting. Got to be careful with inflationary tokens. I mean, literally, Bitcoin. It's inflationary, disinflationary to be specific, but there's enough demand that outpaces supply. So it's understood at this point that that occurs cyclically where demand significantly outpaces supply that coincides with the halving. Um, but look what we've seen with hyperinflationary pool 2 protocols throughout 21 and 22, or rather 20 and 21. You got to get your monetary policy right. Otherwise, you're going to screw over your business, your protocol, and you're going to screw over the purchasers of the assets. So historically, staking protocols have been excessively inflationary, with the process of staking not being effective to disrupt circulating supply to create a balanced monetary policy. So you get a fair amount of price decay. And things that have tried to compensate for that over the years are things like the Curve Federation and the concept of voter escrow, VE33, where you do have an emissions policy and an increasing supply of tokens, but you have a mechanism that separates incentives and drives people to disrupt that increase in supply, sterilizing excess circulating supply. So these financial mechanics are certainly novel to crypto markets. If anything, they're an extension of what nation states have done historically over the last thousands of years. Except we in the crypto space have observed like warp speed product testing of monetary policies. Uh, yes, like 5,000 years of nation state central banks in the last like 4 years. It's pretty dramatic, probably to that degree. MF Income, Fractal. Uh, I One of my largest exposures is Frax, and at this point, Frax is paying 12 and change percent on the money at a base VEFX level, and SFrax was paying 50% that we all saw like yesterday, and that's 50% on dollars, 12.68%. Yeah, I've had Frax for years, and I've gotten basically 0%. All of a sudden, I'm getting 13% of the money. Woo! That's exciting. Let me put that up. Um, I mean, the end game for Frax is to be everywhere on all chains to offer DA infrastructure everywhere. It's literally the same narrative as Celestia, except they have their built-in complete vertical stack uh, designed around um, uh, protocol and liquidity, stablecoin issuance, credit, and management of all of that infrastructure, including an AMM, Frax swap. So they literally have the entire stack that's capable of managing uh, currency printing, a credit extension, foreign exchange, and they have the ferry. So literally, there's cross-border capital flow. I, I mean, Sam basically describes Fractal as the central bank of crypto, and of all protocols in these crypto markets, this is by far the most robust vertical stack, completely integrated vertical stack of very fundamental uh, crypto infrastructure. It's just jaw-dropping what the Sam and team have built over the years and what the current implementation is. And now we're actually seeing revenue. That's quite comforting. So I'm very hesitant to acquire any new positions because I have X amount of cash available, and I happen to keep that a fair amount of that Ethereum denominated on the fractional network. I mean, raw accumulating raw points. We don't know what the significance of that is. We get FXTL points as well. And in the meantime, Frax does what they do best is they recycle their LP revenue, the LP that they own, their protocol owned liquidity, and that creates this constant flow of incentives. So there's a fair amount of LP incentives thrown around just consistently. So SFRX ETH, FRX ETH. That's a great LP to be in. That is a non-volatile LP because basically it's staked Frax ETH and Frax ETH. So that's pretty cool for basically a freebie 70% on top of the yield of SFRX ETH. That's just basically a freebie. So I'm not going to complain. You know, an extra 200 bucks a week, no biggie, or whatever it comes out to be. Just these are the types of things you just let sit. The hardest thing people have engaging with crypto markets is letting time pass. Time does everything. Time does all the work. Tapsy, hi guys. Much a pleasure. Angelo, stay safe, everyone. I think we all appreciate that sentiment. I think we'll go back to macro data. I mean, Bitcoin's literally sitting at 70,315. Uh, is this not the most comforting Bitcoin price action you've ever seen? There's literally a constant bid from ETF folks, and it looks like if this bid just stays the same going into the halving in what, a week? I mean, the halving's literally in a week. You're going to have a significant supply and demand imbalance. I mean, the thing that I like to think about is, oh, it's going to dump. Oh, you got to sell before it dumps. I've been in this market for the better part of, well, 8 years in markets, maybe 10 years knowing about this stuff. But I like to distinguish my behavior from hodling, especially after 2020. Now I encapsulate it into the framework of ownership. I own businesses. And all I want to do is buy businesses at a discount. If I see something that has the potential to be an interesting business, I think like a venture capitalist, an entrepreneur. Oh shit, I like that business. They're making money or they're gonna make money. I want to buy them. What's the valuation? Can I buy a meaningful amount of the business? Can I own 1%, 2% of the business? Or what's the XYZ equation? How much does it cost? How much is it paying? And how likely is it to continue to pay? In this regard, I don't give a shit what the Bitcoin price does. I own businesses in this market. And over time, this market is going to do well for very simple reasons. There's no friction. There's no permission. It's accessible to the frickin' planet. So it's accessible to all nations, but of no nation. This is like the most remarkable market for business opportunity that I've ever seen in my entire life. I guess I'm 40, and I guess maybe there was opportunity back in pre taking the U.S. off. I don't freaking know. Gold standard, maybe pre 70. plenty of frenzy in penny stocks in the 80s, and I don't know, but to me, this is what screams the opportunity is. What am I going to buy? Mining companies? Oh, they're going to go up 5x on the money and pay you 0.1% dividend yield. This is all pure financials, and it's not up to a board. It's not up to uh, a room with a desk encircled by pasty old white men on a board deciding how much scraps they're going to give you as a dividend yield. These are protocols that if the volume on the protocol goes up 1,000x, because all of a sudden these systems are used as significant financial infrastructure, you're going to get a shitload of cash every week because that's the way the protocol is designed to work. And the better protocols are the ones that are immutable, that they're going to pay you pretty much guaranteed because software can't be changed in an immutable protocol. So that's why these are the most interesting opportunities on the entire economic landscape. And everyone should be very damn comfortable. Look at this chart. I mean, this chart is absolutely mind-boggling that people may be uncomfortable in social media. If anything, this chart is ridiculously comforting. It's a breakout. It's by definition a breakout, and a monthly close in a breakout position. And sure, maybe you have a small hanging man candle, but look at the size of this hanging man candle compared to the last 1, 2, 3, 4, 5, 6 months. The last 6 months, Bitcoin's been on an absolute tear from $26,000. This is, to me, that's not necessarily a good investment. 3x on the money. But this is a great expression of the demand for digital financial products and services that make meat space finance look like dum-dums. Central clearing, custodians, escrow services. What are we going to bang two rocks together and take the horse-drawn carriage around the block? No, that shit is some old shit. Old pasty white people sitting around a table making decisions, or you let a software contract with no people make the decisions. Which do you trust more? I trust the software. The software is going to execute how it was programmed to execute. Predictably, repeatedly, deterministically. These types of investments change everything with regard to the entire investment process. Food for thought, food for thought. Well, anywho, uh, it's an ad hoc call on a Thursday. I don't have much more to talk about. I just want to keep you all motivated, engaged, and express to you guys that there's reasons to just be comfortable and let time pass and try and think about markets differently. You don't have to be in a frenzy. You can rest assured that following a rational decision-making process, you're doing reasonable things. Always be rational, and that means you're going to make good decisions. Last couple of questions. One more question. Snoke in the house, you're very welcome. Fogley, what do you think about new launches like Monad when they raised 225 mil? By time of launch, they're already at a premium, of course. Well, 225 mil, it could go to 2.25 bill, and there's a 10x on the money. Do you have a capacity to capitalize on a 10x on the money? What is the expectation? If you have $100,000 and your expectation is a 10x on the money, and the $100,000 turns into $1 million, is that your expectation? Do you have a capacity to meet your expectation? So if the valuation goes from 225, a 10x, all right, it's not impossible. And you put in $1,000 and you turn the $1,000 into $10,000, that doesn't really change much for a $2,000 portfolio. Is that the expectation, though? That might be the expectation. That might be a big deal. So happiness is reality minus expectations, or the opposite. Point being, if you don't meet your expectations, you're going to be disappointed. So remember that when seeing something like this, or frankly, anything. Meet your expectations. Set low expectations. If you get 100x and your expectation was a 5x or a 10x, you're going to be pretty damn excited because you beat your expectations. I hope that helps, ladies and gentlemen. Thursday, April 11th at 4:01 p.m. We're going to end this ad hoc stream. Hope you all feel a little comfortable. I appreciate all of you. You help me get these ideas off my chest, and I love these streams. Maybe we'll get to do them a little bit more often now that we're on X. I wish you all a wonderful day, and frankly, I'll see you tomorrow. Have a good one. Peace.